Morning, Steve Free in Chicago with the morning grain comments. Well, overnight we've got beans up a little bit, soybean oil trading over 84 cents a pound, meals a little bit lower to unchanged, corn's about a penny lower, wheat's anywhere from 6 to 8 cents lower. Stock market looks higher, the dollar looks higher, crude looks higher. And the crude and the Goldman Sachs index, commodity index, both so far have held a pretty important support area and trying to bounce off that. The war in Ukraine continues. Concern about one particular bridge in western Ukraine that may have been destroyed. It has a lot of movement of Ukraine grain to Europe and a lot of movement of military aid from the West to Ukraine. It looks like there is a push by the Russians to try to take over the Ukraine export facilities in the Black Sea. Again, that would disrupt corn and sun oil exports and could offer some support additional to the corn futures and to the soybean oil futures. We also noted yesterday that Stats Canada came out with higher wheat acres and lower canola acres. The lower canola acres had the Motif rapeseed new crop contract making new highs, and I think it's offering some support to soybean oil. The wheat market rallied yesterday, led by Chicago, but Minneapolis was the lagger because of the talk of the higher Canada acreage. Overnight, the maps have changed a little bit here in the United States. It looks like early next week there could be some rain for the Texas Panhandle and into Oklahoma. Also, early next week and maybe next weekend, there could be some rain for the Western Corn Belt. I think corn has rallied because of the late plantings of corn, but certainly those two areas will be happy to get that moisture. I don't think it's a game changer. I don't think it really adds that much to the hard red winter wheat crop yields, but could make things better for planting in the Western Corn Belt. We'll have to watch pretty closely and see if there's any follow-up precip or if there's any change in the jet stream or jet flow that might reduce the chances of dry weather in the Southern Plains and the Western Corn Belt later this year. We also note that in the soybeans, crush margins both on the board and in the cash are very strong, which helps demand there. We're also August into 2023, which I think is helping the soybean market today. We did note that soybean meal stocks in China are down 50% from a year ago, but we also note that the COVID lockdowns could be reducing food demand, and we'll see if the USDA actually lowers soybean imports to China on May 12th, with right now the pace running behind the level that we need to get to the USDA numbers. So again, being supported by demand talk, wheat and corn may be seeing some resistance if the weather does change over the next 10 days across the Midwest and the Southern Plains. Northern Plains still look wet and cold. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.